The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Just wanted to start out the show today with the big rally that we had yesterday, 270 points. I posted into the Tiger TV and hourly chart, and as you can see, last night, the little pattern of three drives to a top up at the 1968 level. That was exactly 50 points off of the bottom that we had yesterday, and then the market's given almost all of it back. We're below the 61% of the move, approaching the 786%. Now, with the lunar eclipse yesterday, this is what occurred. I posted in the chart for August 1988, and I wanted to clarify because this is an old chart that I've had for a while, and that was for my personal use. I never published this or anything, and I probably should have made a little correction here because the market made the lunar eclipse in 1987 was on the 8th of October. The market topped on October the 2nd, which was the Venus-Uranus aspect. That Venus-Uranus aspect happens late tomorrow night, early on the 11th, late on the 10th, early on the 11th. So that's set up. If we go below 1918, folks, we're going to see something that we haven't seen in a very long time. We've had moves of 300 points in the Dow several times now. And I can say with a lot of certainty here that we're going to see a minimum of a 500-point move, and it ain't going to be to the upside to start off with. It might be later, but it'll be a minimum of 500 points to the downside, and most probably closer to 800 points. And that's only because of what's happened in the past, because when these swings start to accelerate, then we're going to see acceleration, and that's basically what happens. And remember that the markets go down faster than they go up because fear is a greater emotion than greed. So we want to keep that in mind looking at that. But this is what we're looking at here. The solar eclipse happened on the 22nd of August in 1987. That was 2 days following the crash. The market actually made a slightly lower low on October 20th. And then we started the rally that took us to 17,000. So whether it'll be that type of a buying opportunity or not, remains to be seen. But we are going to see some weakness here between now and, the middle of October. The ideal situation is for it to hold these levels, especially yesterday. I was feeling just absolutely so good that the fact that the market had held that level and had the big rally and with no follow-through, last night and early this morning, it was telling you that something was wrong, here, and it still has a great deal of volatility to come, but we'll have to just to wait and see, what really happens to it here. I'm going to talk a little bit about the VIX index because, we talked about it yesterday, the fact that the effect is, I'm going to put that up now because since we're on the subject matter, that's what I ought to do, and that's what I will do. And give me a second here to do this, and then we will be okay. And then we need to talk about crude oil because we are making a giant pattern in crude oil as we speak, and we need to cover that also. But first, we'll look at the VIX index here. What's amazing that the Dow's had 600 points of up and down move, and the VIX has gone nowhere. That just really is truly amazing to me. We made a higher high. We talked about that by 5 cents in the VIX over the previous week's high, and stop and think that we're down 250 some points in the Dow, and the VIX is still flirting with that 1700 level. If we get above 1800 level in the VIX, the party's going to be just starting on the downside, I believe. But ideally what we'd like to see, and this is where expectations get you in trouble, because if you expect something to happen and it doesn't, that's your source of all disappointment. So try to come in with no expectations and you're far better off. So unfortunately, I have the expectation that this might hold here, and then we could rally into the early next week or possibly into the 22nd, and that would be the solar eclipse, and that's what I'd like to see, is it be making a high on the solar eclipse and then start to roll over. But the market doesn't always do what you want it to do. It's going to do what it wants to do, and right now it's telling us that it certainly wants to move to the downside. So this is something that we've got to keep an eye on. But the VIX has really been lagging the market. There hasn't been any fear coming into it. That doesn't mean it can't happen, because when it does, it happens very, very quickly. And so we'll have to watch it. We need to hold this 786 retracement here in the S&P, which is down around the 1925 level. And if it can do that, then we've got a little bit of a chance for the market to really to do this. But we have really turned the corner down, folks, in stocks. The German stock market looks absolutely horrible. It's ready to make new lows for the year. If you look at the Russell index, it's made new lows for the year. This divergence that we talked about between the New York Stock Exchange index and the Dow Jones and the S&P and the NASDAQ is just screaming that there's been a massive distribution up here, and that doesn't look like there's going to be any help. And I frankly don't think that the Federal Reserve Board or the ECB is going to do very much about it. They'll be able to, stem some of it off with their jawboning and stuff, but there's really some problems, here in the market. I've had a request to take a look at the Bradley model, which we will now, because, oh dear, if you'll give me a second here. Why, there we go. Now we're okay. Just give me a second here. We don't want to panic too much. We're almost taking out the lows of, see, it would be nice if this thing it doesn't always do what you want it to do, but we're over we're over a Bradley date, and if this is correct, we should hold this level here, and which was a 61% retracement of the previous low that we made back in August. But we are going to take out the February lows in the stock market, folks, and that's only, that's nothing. That's only 1,400 points. We could cover that in a day and a half once it starts down. But I don't believe the real starting down will happen until the 22nd, when we have the solar eclipse. Now, that's because we have a lot of things happening at that time, and we'll just have to wait and see. And believe me, I sold some last night, so I'm of the opinion that we are going to go a lot lower, but the question is whether it's going to hold right here, right now. This is what the Bradley model is saying, that it is going to hold here, and also the VIX index is telling you that it's going to hold here. Now, whether that's going to be the case or not remains to be seen, because we get above 18 in the VIX, well, the Dow will be down more than 300 if that happens, and then you know where it'll go from there. So once it starts down very, very fast, and that's the whole key to watching this. So still some more to go. It's got some support. The Dow is still quite a ways from the old bottom, which was at 16,670. It's still 70 points away, and if we get below that, then you can say that we're probably going to start this a little bit early. And believe me, this is just the start, folks. This is not. And this is my opinion, of course. But this is just the start of what we're looking at. We're going to have Rich Anderson on the line here at the break and talk to us about some of these things. We have a very interesting pattern completing as we speak right now that we've talked about before, and that's the commodity of the crude oil. We're down at the 86 level. That's the ABCD pattern that has started about a year and a half ago. And the 786 retracement comes in $1 a barrel lower than that, at around 85. So between 85 and 86, we're looking for a potential bounce in the crude oil. Heating oil is making new lows for the year. As most of you are aware, gasoline prices have dropped quite a bit, from $3.70 down to $2.97. So it's been quite a big move to the downside here. And whether it's going to continue or not, we have to wait and see. But they're starting. If you'll notice that it's really funny. You got to ask yourself, any market that can give you 300 points can take 300 points away from you. That we already know that. But when the market goes up that fast and comes down that fast, that's not bullish action, folks. It really isn't. I mean, it's if it was really good, the thing would have screamed this morning and gone up another 200 points. But it didn't. It stopped, right where it should have. If you looked at the little pattern that I put on the hourly chart that I posted into Tiger TV this morning, it was a perfect 3-drive pattern. It was so perfectly symmetrical that it was just really amazing. It stopped right at 1968, exactly 50 points higher. Not that 50 is a magical number or anything, but it lined up exactly right within 3 points of the 618 retracement of the previous swing. So that's the bottom line of what we're watching here. So this is the key. We've got a lot of these commodities have been hit really hard. Gold, silver, copper, beans, oil, meal, crude oil, heating oil, gasoline. There's deflationary all across the complex that we've been talking about it for a very long time, and that is not what happens when you have a booming GDP economy. These commodities should be absorbed quickly and people should be building stocks, but they're not. And the reason why they're not is because they can replace them with cheaper materials in 30 days. So that's pretty much the bottom line. So it's not nearly as bullish as you might want to think. So the old Chinese curse, "May you live in interesting times," is certainly true during this time period that we're talking about right now. But if the Dow can hold this old low we had at 16,600, down about another 70 points, that would put the Dow down about 320 on the day, I guess. If it can hold that, then we still got a chance to see if it's going to hold. Luckily, from the pattern recognition point of view, we are having some fabulous, just absolutely fabulous volatility, and that's exactly what you like to see, because when you see that, you'll see the patterns that we look at, the Gartley's, butterflies, ABCDs, 3-drive to a top patterns. They'll be so prominent that it really is really fun to trade during those hours. The problem is, with this 24-hour trading, you have a tendency to stay up too late or get up in the middle of the night and do something, and that makes you a little tired during the day. So when you get to be my age, you got to pace yourself a little better. So we'll see if this is going to be something that is going to happen. But this is going to be interesting here the next 36 hours here in the oil market, because we're only about $0.50 away now from the 85 level in the crude oil, and we'll see if that's going to hold up. So we got the Dow down a couple hundred points, and we got gold up on the day and silver up on the day. We'll be right back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we are really weakening up here. S&P's down 30, the Dow's down a couple hundred. This thing is really looking bad. I think you just start selling, and especially if we get below 1929, I would certainly, look to get, sell more if you're not already short. So we'll see. This thing has got all the earmarks that lunar eclipse might have been it yesterday on that 50-point rally. And if that's the case, if we make new lows today below 1918, this is going to be really bad for two reasons. One is you're breaking the low after a 50% or 61% rally off the previous high. And the second thing is you're going to be making the largest move down in the Dow that we've had year to date. It'll be more than 300 points. And I firmly believe that the down move, that first down leg that we get, will be 500 points or more. And the reason for that is when these markets start down, the first swing, whatever it is at X, the second swing will be 1.618 of X, and we made a 300-point move in the Dow Jones, down 300 twice now in the past several months. So that tells us that the next move would be 1.618 of that, which would take you to 500 points. So that's why I'm watching it very, very closely. Now, we've had a pretty good rally here in gold and silver, and I just wanted to show you what's going on there. I'm going to do very simple here to do a hourly chart because we had another divergence here with silver acting, a lot worse than the gold. But yesterday, silver made a perfect 61% retracement down at the $17.05 per ounce level. I think Mr. Z in the room was talking about that as it was happening. But the problem is that silver can't even get above the highs of the 25th of September, whereas gold took out the highs of the 22nd of September, which happened to be a 61% retracement of the previous high that we made back in August. So now we're getting a sell-off, and if this market is good in gold, and it's still up, $18, we should stay above, the $1,216 per ounce in the silver, in the gold, and stay above $17 per ounce in the silver. And right now, silver is trading at around $17.40 per ounce. So that's really, what we're looking at here. So we're now, as we speak here, we're down more than 32 points here in the S&P. We're breaking below the 786. We're only now 11 points away from the low we made yesterday. The Dow is very, very close to breaking through those lows if it already hasn't. And so that's this could be the day, folks, that this thing starts down, and we'll have to give it a little bit of time. But no matter what happens, this thing is really turned bearish, and it's turned bearish in a very bad way in the stock market. And remember, we've got the selling all across all the commodities has also been very bad. And by the way, we have Rich Anderson coming on at the break to talk to us about some of this stuff. And one of the things that I spoke about, Rich, last night and again this morning is the potential for margin call selling and stuff like that. So those are some of the things we're going to cover when Rich comes on. If you have any questions, give us a call here at TFNN, 877-927-6648. And Rich will be on to answer any questions that you might have here. But we are continue to weaken. As you can see, there's just no buying coming into the market now as we start to accelerate, and we're only halfway through the day. So unless a miracle happens, we look like we're getting ready, to have something really dramatic happen today, folks. We'll see. The question is maybe that this Venus-Uranus opposition that we have on Saturday is going to be a bottom, possibly. I don't see that. But look at the VIX index, folks. It's trading at 1704. It's still a full point under where we were just, a few days ago. I mean, when the Dow was having another 250-point move. So it's going to be fun, no matter what, any way you look at it. So it's really going to be. We haven't had a 1,000-point move in the Dow since the flash crash day, and I don't think we even had a 1,000-point move Dow in the Dow. No, we did not. During the 2008 crash, the biggest down day was 777, and the biggest up day, the rally after that, was 888. So that's the difference. So anyway, we're going to have Rich at the break. So we have the Dow down a couple hundred, the S&P making new lows, and gold holding up nicely.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we continue to break. And what's amazing is that VIX index doesn't want to go up, which is really surprising. We've got our good friend Rich Anderson of Anderson Capital Management on. Rich, are you there?
You bet, I'm here, Larry.
All right, I'm going to put you...
By the way, we were just talking about it. Seems a lot like, 87 when the Twins were playing baseball still. And, of course, we had the break.
Well, if we get much below 1918, I think we're probably going to see something like that again. It'll be a little different than it was, of course, in 87. All markets are different, but it sure has some of the parameters that we're looking for. Rich, what do you make of this? I mean, do you have any opinions of what's happening?
Well, we have a bubble in prices in the equity markets, and in the old saying, "Don't fight the Fed." The Fed yesterday in their minutes said they probably keep interest rates a lot lower for a lot longer than people think. I mean, that was what the traders took out of it. But the problem is we really need to raise our interest rates, but the rest of the world needs to lower theirs because Europe's in a slowdown. The slowdown in this country will only come, I think, maybe because Ebola will become a bigger deal than what it is now, or something like that. The oil prices are being driven down to punish Russia, and the Saudis are trying to punish the oil shale people, trying to get it below $80 a barrel, where it would make some of the wells out in North Dakota and in the different parts of the country where we've got the shale oil not quite as economical. What you don't appreciate is that if you're up in North Dakota, you might get $15 or $20 under for your oil. The board.
You're kidding.
No, there's big discounts because we don't have that XL pipeline, and so the stuff's all moved by rail, and it's just a lot of issues. But yeah, I mean, this is like crude oil. One of the issues is we don't have a crude refinery close by to handle this. The heavy crude, which isn't as valuable of oil, is what most of these refiners are set up for. And there's just a lot of structural problems that causes that. I mean, I'm not an oil trader, but I know a little bit about this and that. And frankly, I think over the next year, I was thinking about, you asked me a week ago about best ideas. I think one of the better ideas that'll have some legs is to sell the Brent and buy the WTI. So you're selling, world oil prices, the Brent crude, and you're buying the West Texas Intermediate, and there's a huge spread there, and that spread's been narrowing, and it'll, I think, continue to narrow over the next year. And as you look out into the distant months, it's wider. So you put it on, and it's a thing you have to hold. But I kind of like that idea. Like I said, I'm not a big oil trader, but sometimes you have ideas based on things that are structural, things that are happening, and it looks like a pretty sound trade over a fairly good amount of time.
Okay, we got a caller for a specific question for you. He's one of our favorite people from Atlanta, Georgia. Charlie, are you there?
Yes, I am. How are you?
I'm good. This is Rich Anderson waiting for your question, Charlie. Go ahead.
I'm not asking anything about price. Rich.
Rich, this guy only knows how to sell price lines, so you got to respect him.
Okay.
Go ahead, Charlie.
I don't know how to buy. I only know how to sell. The question is, are you familiar with the fact that the Chinese had refused 8 shiploads of corn? Are you familiar? Have you heard of that?
Yeah, they did. They started by refusing DDGs, dried distiller grains. They do that at their leisure whenever it makes economic sense to them, as they identified that their corn crop was coming in rather well, and they would have plenty of supplies. The dried distiller grains, when we very first started the ethanol business, would be given away. I mean, they would actually say, come and pick it up for free. And then after a while, they did realize, well, it's actually better feed than a lot of products. So they started charging, and then they started drying it and exporting it, and the main export market was China. And then when they rejected some of that, and then they rejected some corn, I mean, that was really the beginning of the sell-off in the grains, particularly of the corn. And now that this pop back that we've had in this last week or two, PIMCO covered all their short the commodity positions. I don't know if you heard about that or not, but they've had some shakeups going on there, and they just decided it was time to get out of that. So whenever the market's too long or too short, and you've got a big trader or that has a position that they have to remove from the market, it sometimes causes gyrations much bigger than you would anticipate.
Did the Chinese resume their buying? Are they buying back again?
No, we're just at the beginning of corn harvest, both here and over there, so they won't, we believe they will need to import corn, and they will need to import it from us, because while we aren't the only market for soybeans in the world, because you got South America, we are for corn, but it'll be some time from now. It'll be months from now, maybe be March, April of next year. They'll depend on their own locally produced corn first. The only reason they start buying corn again right now is that China's a huge country, and some of their corn that's in one part of the country, it's cheaper to buy from us rather than ship it from that part of the country to the other part of the country. But they won't be a primary, major league buyer until they've used up some of their crop.
Do they buy our wheat by any chance?
That even though we think of China as a primarily a rice-producing country, they also produce a huge quantity of wheat. They aren't one of our major customers in wheat.
I see. I'm wondering now, is it possible to call you directly? Because I know I'm calling you through TFNN and talk to you about this some information I'm interested in.
Sure. Yeah. Call Larry, and then he'll give you my number. How's that sound? Or send Larry an email, or send.
Okay, I'll get.
Don't necessarily
Rich's,
want to put it out on
I'll
the
get
air.
Rich's number too. Yeah. No. Well, everybody knows it's 612-555-5555. I will get the phone number to you, Charlie, and then you can give Rich a call. You still accept carte blanche and Diners Club cards, Rich?
No, I don't do any of that. But speaking of that, I did get a phone call today from one of your old students from about 14 years ago, and he told me how well he'd been doing, and I mean, he was trading size now, and you don't trade size unless you get good, because if you're trading size and you're wrong, you get blown out of the water. So he obviously was very thankful, and I'd learned quite a bit from you over the years.
Well, he didn't call me. I'm glad he called you, so that's okay.
Okay, Larry, I will send you an email then.
Thanks for coming in, Charlie.
Yes, take care.
You
Bye.
bet.
We'll talk to you, Charlie.
Rich, one last comment here on the meats, and then I'll let you go. What's your feeling here? We're 166 or 167 in D's cattle. How much higher are they going to go, buddy?
Well, basically, it's 9 months of gestation. Then it's 12 months where they're nursing until they become a feeder calf, and they're sold to a feedlot. And then it's another 6 months of being fed. The worst part of the drought in the Southwest is approximately 27 months ago from November, December. So we're probably running into the shortest period of time. If you noticed last week, we had chicks placements were up 3%, and egg sets were up 5%. By June of next year, we're going to have a whole lot more protein, because you can turn chickens around. That's 9 weeks versus 9 months, and then it's a couple months to feed them. We're just going to have a whole lot more protein. The best trade idea I told you a week or two ago was to buy Ock and sell these cattle, but I said your average person can't do it because the firms won't allow you to trade in the delivery month.
Sure.
Unless you have the ability to make or take delivery. That's moved about 200 points. By yesterday, it moved over 200 points since we last talked.
Oh, that's
But I do like the oil idea. I think that's a long-term thing that, will just gradually make you some money.
All right, listen, buddy, I really appreciate you calling in. And when's our next crop report? It's due tomorrow, isn't it?
It's tomorrow. The bulls are saying they're going to reduce the acres of corn, and the bears are saying, it doesn't matter if they reduce the acres of corn. Our yields are going to be so much higher that it isn't going to matter. Mm-hmm. And by the way, the big thing for next year will be the acreage shift from corn acres to bean acres. So anytime the new crop beans of next year, November 15th, rally decent amounts, provided there's no weather concerns, I'm going to be a seller.
All righty.
Because of the acre shift.
Thanks for calling in, Rich, and enjoy your time down in Florida when you go, buddy. I know you don't like to keep those
Sunday.
Winters in Minnesota going.
I know. It sounds good. You take care.
All right. You bet.
Thanks.
That was Rich Anderson of Anderson Capital Management. We're getting really close here in the VIX index of taking out that 18 level. We're trading at 1778 right now, and it's going to be interesting to see what happens. The stocks have actually stopped going down temporarily. We've had about a 4-point bounce in the S&P, which is basically nothing, but it was able to get back above the 786 retracement, which could give some sign of hope here, so we'll keep watching. Now, I did want to spend some time here about the euro and the currencies, because we've had such a big move here. We finally had a huge move huge for nearby purposes, and that is when we hit the 125 level in the euro, we rallied all the way up to 127.8, almost exactly 128 level last night, and since that time we backed off about 100 pips. So we're going to see if these currencies are going to hold these levels or not. But we hit so many really critical levels in the currencies this past Sunday night that what we were talking about has held up relatively well. I'm going to show you the Japanese yen here next, because that's one of the larger economies. It's backed off well over 300 pips from its high. And is still, down quite a bit from Sunday night. That one is, looks like it's made some type of a major top up here at the 110 and change level. And then, of course, we want to take a look at Canadian dollar, which has been one of our favorites here. And that had well over a 150 pip move here in the last yesterday, between yesterday and today, and then it came back and put on another 100 points to the upside today. So we're having tremendous volatility all across in the currencies. And folks, that's another thing that happened during 1987. This whole thing started in Japan when the Secretary of State was over there. Gosh, I can't remember his name. I can see his face, but I can't remember his name. Another senior moment has grabbed me. Baker. I think it wasn't Baker. No. It might have been Baker. I don't remember. Yeah, it was James Baker. Right. And thank you. And he was talking in Japan, and he came out of a meeting and saying, well, we're having some problems, and boy, that was it. The currencies went crazy, gold went crazy, and then stocks gave up, and that's pretty good what happened. So that was 27 years ago, and I understand that Mr. Baker is still alive. Well, that's great. Anyway, the Canadian dollar got up to that 112 level that it stopped at. Right now we're trading at 111.66, so it's still back near that old level again, and it has held up, relatively well given the others. And the other one that was very, very important from our point of view, looking at all these different Fibonacci numbers and things that we have, was the Swiss franc on the weekly basis went up and made a beautiful 786 retracement of the highs we made in 2012. So all of that is coming together in the currency market. So as long as we stay above the lows we made Sunday night, we've got a chance here to see a pretty good move here in these currencies. And believe me, just because the dollar got up to 87 doesn't mean it can't move back down into that 80 level or even 75 level, because when that thing moves, it really moves a lot. So that's the key to what we're watching in this area. Now the VIX index, we've been talking about that since we came on the air. We're almost up to 18 now in the VIX. It's getting very, very close. The old high we made yesterday was at 1805. That was before the market rallied 300 points, and the VIX went from 1805 all the way down to 15. It had a 20% move in just a matter of a few hours. And what's it doing now? It's going right back up with a 20% move to the upside. So volatility is here, folks. That's the bottom line. So we did test the 786 in the S&P futures. One thing we should do is let's check the S&P cash just quickly here, because I think we're at such a critical level here. We really need to do this. Yep, we still held it okay. We are, hold on, let me make sure. We're still above the lows that we made yesterday, which is a good sign. Yep, we came right down to the 786 retracement. Let me put that into the room, and you'll be able to see that we did hold it spot on, at least to begin with. And we'll put this up so everybody can take a look at it. And then we're going to take a little break here. We've still got the Dow down a couple hundred. Market's coming back just a tad. So we'll be right back after these words.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into Tiger TV the New York Stock Exchange Index overlaid on the with the Dow Jones overlaid on top of it. As you can see, those divergences that we had in July and also the one we had in September. The importance of those, and as you can see now, we are trading right at the 786 retracement of the low we made in April of last year. April of this year. So it's important that this New York Stock Exchange Index can hold this 10,400 level. We're trading at 10,447 right now, so we'll see if that's going to be the case. We'll have to just to wait and see. The ideal situation from my expectation point of view, which we all know that expectations are what cause of all of our problems, because when your expectations are not fulfilled, that's the source of all your frustration. And I certainly believe that. It's true whether your spouse, your children, your own goals, or whatever it happens to be, your sporting team. Who knows what it happens. Whatever it is, when your expectations are not met, that's when your frustrations come in. So what we're expecting and what we're going to see is two different things, but ideally I would like to see the market hold right in here Thursday and Friday, and then rally into next week, into the Friday of next week, and then after that, look out, because then we've got big problems. We've got big problems anyway. It's just a matter of when it starts to roll over. That's really the bottom line of what we're watching here. So keep that in mind, that, whenever these rallies happen, get ready to, lighten yourself up from the long side of stocks, because the divergence that we've seen here in the stock market, and this is major. I mean, we've never seen anything like this before, folks. So keep in mind that when we're in this area, we're going to have incredible volatility in October. I've showed you that transit chart, what it looks like, and it's going to be really interesting here, because we're having moves of 300 points in the Dow now in a matter of a few hours. Well, if it can do 300 points in a day, it can do 500 or 800 points in a day. We already know that it's done 888 points during 2008, and we know that it did 770 points in 2009. So we know that these numbers are there, and so this is what we have to work with. Now, we will most probably break that 888 record by 1.618, and that would take us 1,300 points in the Dow. So 1,300 points is the benchmark, which is down about 9% in one day, and we could do that without too much trouble. So just get ready, because we are starting to see, the deck is, the Titanic there. Somebody's arranging the deck chairs. That's all I can say. So be real careful in here if you're long stocks. I don't want anybody, to get hurt badly. Everybody that's bought the Russell for the whole year is underwater. It's, trading below the lows of January, so that's not a very good sign either. The Dow was at 13,500 in January. So this is where you have to really be careful. That's the bottom line of what, what's happening. And be careful of what you listen to in the news too, because what you hear isn't necessarily what's going on. So let the price action tell you, what's going on, because if prices are going up and it's really bad news, somebody knows something. And if prices are going down and it's good news, somebody knows something. So let the price action dictate, what's really happening, because we're the last people to know any type of inside information. I've never gotten a tip myself in all these years that actually ever worked. Got a lot of tips, but none of them worked. But remember, they're not going to tell us. The price action determines where we are. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.